Good evening. My name is Rick, and no, I am not Huskins, your Forex mentor, but I am a student of Mr. Huskins. And under his tutelage, I am recording my trade plan on the Canadian Core Retail Sales Release due out on August 22nd, 8:30 a.m. Eastern Standard Time, or for me, 7:30 a.m. Central Standard Time here in the United States. I'm going to spend a few minutes going over the trade plan, some charts, hopefully give you some examples of how my research has shown how this trade has worked in the past. Before I begin, I'd like to ask for your patience. This is the first time I am recording a trade plan, and it may be a bit jumpy, and I'm not familiar with this particular recording platform. I would also like to remind you all that this video is for educational purposes and not an endorsement or recommendation to follow this particular trade plan. As an intelligent trader, Forex, equity, futures, whatever you're trading, you should always perform your own research and validation, and never ever place a trade because someone gave you a tip or presented a specific trade plan. That's theirs. We should all become critical skeptics until you prove otherwise. If you decide to follow someone else's trade plan, then it becomes your trade plan. With that said, let's review the verbiage of this plan, as it can be a bit complex and will need some clarification to understand how my thought process worked on this. So in front of us we have the particular trade plan. Now hopefully while you were listening to me, you've been reading this as what the core retail sales mean for the Canadian dollar. Just be aware of a special note that today the Canadian retail sales are followed by the U.S. existing home sales at 9 a.m. Central, 10 a.m. Eastern Standard Time. I have not noticed a huge impact on the Canadian retail sales whenever this has coincided with it, which is not very often, but just something to be aware of. The pair we're going to trade is US-Canada. I've done research on the Euro and CAD and the USD CAD, and all my research points to the USD CAD for this trade. Pre-release, not at this time. However, during my analysis I did notice some things that I'm going to consider in the future. I will do some additional research. Trigger: any deviation greater than or less than 0.10 from the forecast. So what does that mean to us? Well, let's have a look here. Here is the release of the Canadian core sales month on month, and let's go up here. July 24th, forecast was 0, the actual was 0.5, a positive 0.5. Therefore the release was greater than the forecasted. Here we have a forecasted of 0.3, the actual was a negative 0.3, or a deviation of a negative 6. Therefore this particular release was minus 0.6 from the forecasted. Okay, so hopefully that'll give us some indication of what I'm speaking about as we relate to the deviation greater than or less than 0.10 from the forecast. It's a post-release trade, and it can be a continuation or a reversal dependent on the pre-release trend and the release data. Here's what to expect. The release generally, with rare exceptions, causes the pair to move in the direction of the release. Positive results for the CAD equal sell the USD. Negative results for the CAD equal buy the USD. So how do we trade this? Determine the pre-release trend by loading a 30-minute chart of the USD CAD with a 200 SMA. Write it down, and I'm going to use the term bull and bear as an indicator of what my pre-release trend is, and we'll see it in my matrix below. Be aware that the news release is a key element of this trade. We're going to load a 5 and 15-minute chart with a 21 SMA and observe the release, and we're going to follow the grid below. Scenario 1 and 5, bull is the pre-release trend. The actual release is less than. We would expect the candle, the 15-minute candle, to be a bull candle. The actual 15-minute candle is a bull. What do? You buy immediately. 5 is the same scenario for bear. The trend is bear. The release is greater than, which is positive for the Canadian dollar. We would expect the first 15-minute candle to be bearish. If it is, and we see that the actual 15-minute candle is bear, we sell immediately. Nothing else to wait for. It becomes a continuation of the existing trend. The other scenarios are every other scenario that could occur, and we'll talk one more only, and the rest we'll just read through and go from there. Pre-release trend is bull. The actual release is greater than. We would expect the first 15-minute candle to be bearish. it is actually bearish, what do? You buy or sell on a 21 SMA crossover. The same scenario holds true for the bear market, except for scenario 7. This particular scenario has never occurred. I shouldn't say never, but has not occurred in the past 14 trades, so 14 months. If you see this, to me it's a no trade. There are some other indicators for no trade. Do not trade if unable to clearly identify the pre-release trend or pre-release trend has been very choppy. Do not trade. I have seen this in a number and they have become no trades for me. If the actual release data is equal to the forecasted, do not trade. If the release is 0.5 and the forecast is 0.5, they are equal. Do not trade it. If the first 15-minute candle is undecided or unclear to you, do not trade. For scenarios 2, 3, 4, 6, and 8, if there is no crossover, do not trade. Target minimum 30 pips. Here's my view on the take profit, and this I'm sure will be posted on the Forex Peace Army website for us to review as we're watching this video. And the stop is 30 pips. Be aware of some nearby support and resistance zones. For me personally, I will move my stop to a break even after a 15 pip gain and hope that we're going to get to the gains of 30 plus pips. Last 12 trades, we've had 6 win, 1 loss, 2 break even, and 3 no trade. I'm now going to show you some charts on this as how this trade has worked for me, not worked for me, but how my research has done in the past. I have not traded this in the past. This is purely research and my first trade plan on the Canadian retail sales. Alright, in front of us here we have the July 24th, and this is 7:37, but I'll move this to 7:30 as we get to the 15-minute candle. This is a 30-minute chart. The reason I put this up was here's my 200 SMA, and I'm calling this particular scenario a pre-release trend of bullish. And since Friday has changed direction, has come up, and is continuing that particular move. So my pre-release trend is bullish. Taking this to a 5-minute chart, that's before we get anywhere. I'm going to change this to a 15 so we can't really see what's happening before we walk through it. And here we go. 15-minute chart. And it's frozen on me here, of course. Alright, here in front of us we have a 15-minute chart on the USD CAD. Over here I have the line drawn at the 7:30 release time. The particular information on this trade was the actual release was a positive 0.5. So actual release was positive. We would expect the impact to be bullish. What happens? So let's take a look. The first candle was bear. If we look at the particular grid that we have set up for this trade, it is going to be a long trade when it crosses the 21 SMA. Right here we have a crossover of the 21 SMA. Let's put a quick line there. Here's our line, and let's see what happens. And there we go. Not a huge trade, but we can pick up some nice pips on this, from 182 to 230. This is a chart of the May 23rd 30-minute chart with a 200 SMA, and the trend on this is, in my opinion, and probably everyone else's, definitely a bullish trend. Alright, in front of us now we have the May 23rd 2012 release. The particular release information was a negative 0.4 on this. The pre-trend, as we had talked about, was bullish. We would expect the candle to be long, and let's take a look to what happens. That candle is long. My trade plan now is scenario 1, bull, bull, bull. We buy it, and let's mark where we bought it from, and let's see where this goes for us. Price level, we bought it, We've set our stop below, not too bad. It's only dropped 20 some pips below that. 27. Again, not a big trade, but we've gone from 33 to 295. I take that back. That is a big trade. I like that trade a lot. Alright, in front of you I've loaded the chart for April trade. The trade took place on April 24th. I have the 30-minute chart, 200 SMA. I'm classifying this as a bull trend. I'm sorry, I'm completely wrong. I classify this as a bear trend. Okay, I've now loaded the 15-minute chart, and we're coming up to trade time. The particular release in this case is a negative 0.10, therefore it is less than. The pre-trend is bear. I would expect the candle to be long, and let's see what happens. There it is. It is long. I'm sorry. Yes, it is long. Best trade is short on this. Let's stop this and see if I can't. Okay, in front of us here I've loaded the chart for the April 24th, 2012 release. The release was a negative 0.10. As we have shown, the particular trend on this pre-release is bearish. This is a bear trend. We would expect a long candle, and let's see what happens. We get a long candle. So the trade on this is bear, bull, bull. If we go and look at the chart on this, it is a sell on a 21 SMA crossover on a 5-minute chart. Let's put the 5-minute on here, and let's get this where it happens. Enlarge it a little bit, and here we go. So we've had the release. We're now 15 minutes past. Coming down, we're going to sell it at the 21 SMA crossover, which occurs right here. And let's see what happens. Nice little trade. And depending on how long you decide to stay into this, some sufficient pips on this. Okay, 30 at this point. Hopefully you've enjoyed this. If you have any questions, let's post them on the website and FPA, and let's see where this thing takes us. Appreciate your time. Have a good trade, guys. Bye.